Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan. Delighted to be back with you again, and thank you for taking the time to be with us on our podcast. I know you're going to find today's episode enlightening and interesting. And with us today is Charles Bulthuis, and he is a commercial real estate broker and the president and founder of Reformation Asset Management, a veteran certified residential specialist, accredited buyer's representative, and an honorary CCIM member. Charles has spent the past 30 years refining his innovative insights in the investment and wealth management industry. Welcome to the show, Charles, and take us into the show and share a memorable experience that helped you to be who you are today.
Hello, good afternoon, and thank you for having me. If I were to reflect on something that would be very important to the way that I manage things today, I would have to say that it would be my time serving in the U.S. Army. In the United States Army, one of the things that they teach is integrated combat arms, which is a polite way of saying they make their ground forces, their air forces, and their sea forces all interact and act as one. And serving in the Army taught me about the means of research to find solutions to problems, team building, leadership qualities, and very importantly, this combined arms philosophy. That led me to creating the company that I have today, which services the client from start to finish.
Interesting trajectory. You started out, we were talking before we got on air here that you had started out in California, and just right after getting out of the Army, and you built your business there, and then you moved to the Durham, North Carolina area in 2003. So you've been here almost 21 years now. So tell us what it is that defines value add property from your perspective and from your many years of experience.
A value add property would be a property that has hidden value either through the mismanagement of the property. It hasn't had its rents properly managed to meet the market expectations. It hasn't been updated properly. It hasn't been maintained properly. And so when we're looking for a value add, we're looking for a property that, in a nutshell, we can walk into the property and we can perform repairs to the property, increase the rents on the property, and increase the overall yield. So the project cost, which is the cost of the remodel or the repairs, plus the purchase price, divided by the rate of return, or divided by the amount of money that you're going to be earning on your investment, is how we determine our rate of return.
And so how is it that you go about finding these value add properties?
One of the things that we look for is properties that are in areas that we are attracted to, that are in the path of progress. I don't want to focus on where the herd already is, grazing. I want to find my own little knoll of green grass and, put myself there first. So I look at the different changes that are coming to the zoning laws or the transportation laws or new construction based on permits pulled. If we're going to have a major employer or a major commercial site developed, I want to acquire properties proximal to those different key indicators of growth.
And so that takes us to the next question. Take us into a little bit more detail in terms of what those indicators are that a property is in the pathway of growth.
Changes such as new schools being built, new highways being built, office projects being built, high-rise shopping centers, things that would attract more residences in the area. What will happen is there will be a local population of existing housing, and that local population of existing housing is already there. So you don't have to buy the land, you don't have to build the product, it's there. You want to acquire that product in advance of these new construction projects that are in the hundreds of millions of dollars, and you want to acquire your properties prior to their completion. And then as the properties are being developed, you increase your property value by doing the repairs necessary to your property, raising the rents, and now you've become the benefactor of the ability to raise rents higher than what they would have been prior to that new construction going in.
So it sounds like timing is a crucial aspect of your investment strategies. What is the downside to taking this particular strategy?
It requires more research. You have to be willing to look at the changes in the zoning laws. You have to be able to want to read the different publications that are going to be talking about companies that are moving here and what their site locations are and what the timing of their new construction is going to be. You have to invest that extra time. So, it's not necessarily that that's a downside, but it's an extra step that's necessary. The downside, I would say, really to what I talk about is in the event that a project were to not happen.
Mm-hmm.
So you want to acquire land in advance of the project completion, but you don't want to buy it in advance of the land being purchased by that new developer or that company that's moving into the area or that freeway that's being developed. You want to ensure that that purchase has occurred before you acquire your property.
Yeah, I could see how that could take a whole lot of research and a whole lot of familiarity with the property in which the properties in which you're interested in investing. And it seems like not only does it take a lot of research, a lot of knowledge, a lot of understanding in that, but it seems to me like it would take a lot of intuitive sense that actually just comes from, I suspect, probably a whole lot of experience. Tell us about your experiences. Everybody has hard knocks and setbacks. Tell us about your biggest setback.
Well, my biggest setback is actually still in play.
Hmm.
So I started a construction company about 2.5 years ago to put the bookend on what my company does for our clients, and it allowed us to control costs and it allowed us to control timing. We don't sub out the work unless it's a roof or asphalt. Other than that, we can do everything in house now. We bought our own equipment. So we have 17 different pieces of equipment and vehicles in the company. And the first client that we worked with on a major scale was a 108 door project. And he kept changing his orders. I don't want marble, I want quartz, I want a waterfall, I want this, I want that. And of course, it's a 60-year-old community. So as we open up walls, we discover things we didn't know about. Plumbing that's bad. There's just increases in costs.
Mm-hmm.
Now, we're still coming in with, bamboo, quartz, stainless steel, brand new from the studs up, all brand new plumbing in the street and in the building, complete exterior work, stairs, roofs, siding, fire extinguishers, exit signs, you name it. We're still coming in at about $160 a foot for interior, exterior, and site work. But it's not what he was hoping to spend. And as he ran out of money, I carried him because he's been a client for 10 years. And then I even loaned him money to keep him out of foreclosure. And then when the time came due for him to move forward and pay us or have us sell some of the property so he could get more funds, he decided not to.
So where are you with that now?
So between the money lent to him, the money he hasn't paid, etc., I'm waiting on about $850,000, $900,000 that he owes me. He doesn't want to sue me, but I have a lawyer because I want my money.
Hmm.
I didn't do anything wrong. And so, of
Yeah.
course, yeah, you don't want to sue me because you're not going to win.
Hmm.
But I've leaned his properties and I've talked to his bankers. And at the end of the day, we'll see where this goes. But the long story short is I mixed business with friendship. I
Hmm.
allowed a client that I've known for 10 years that was a very good client to pull on my heartstrings, and I advanced him money beyond any point of reason. And I should not
Hmm.
have done that.
So he could easily resolve this, it seems to me, like by giving you a share of the property. Would that not work?
Yeah, that's what my attorneys and the bankers recommend.
Yeah. And he won't do it.
We don't know yet.
You don't know yet. Okay.
It's
So
still in process.
it's
This is
still in
raw.
it's still in
This is a
process.
raw wound.
Wow. Yeah. Well, I hope he does that. I mean, it seems like it could be a profitable endeavor for both of you if he would just be reasonable in that concern.
And the
I,
reality is, as he
yeah.
prices out the work that we did with other people, he's going to see that he's not going to get it done for less money. It will cost more money.
Hmm.
So he's not helping himself.
Yeah. Just delaying the process of getting it rented up, I suspect. But I do hope it works out okay for you. And well, I don't see why it couldn't work out for both of you. It just sounds like an excellent deal. It sounds to me like, from everything you were describing there, that that was close to a teardown. What was left when you gutted everything?
We had foundation and frame. That's about it.
That's
And
about
then,
it.
the site.
Yeah.
Uh, literally everything else is new. All of the insulation. I mean, obviously the wiring, the
Hmm.
plumbing, the appliances, the windows.
Yeah.
It's a new build from the perspective of construction minus the framing and the slab, which is about $15 a foot. So it's a beautiful product. One of the real problems here, though, is that our interest rates went from historic lows
Hmm.
when the project started to the fastest rate of increase in 28 years.
Hmm.
And what I recommended is a price point predicated on a rent for a similar product was about 1650 a month. And when rates moved up based on the price he wanted and based on the interest rates, a person would need to pay about $2,500 a month for that product, which is 50% more than if they just stayed renting a similar product. So it doesn't make sense for a person to move.
Yeah. Well, is it an A, B, or C class property?
A B class.
A B
When we
class,
bought it, it
yes.
was C, but
Hmm.
now it's definitely high B.
High B, yeah. Well, it sounds like an interesting project, to be sure. So you're totally vertically integrated from the brokerage side to property management to providing renovation assistance. And do you do the asset management as well?
So we will discuss with our clients what their goals are. Are their
Mhm.
goals, are you intending to hold these long term? Are you intending to maximize their value through process of 1031 exchange? If they, and we'll do an analysis on an annual basis for their property. If it gets to the point where their return on equity is in the single digits, then I will have a discussion with them about the value of exchanging that property into higher density property. And that's where the asset management portion of the company's name comes in to play. But by virtue of assisting them in finding the properties, managing the trades or the contracts for purchase and sale, managing the properties when we acquire them so that we can remove the tenants, remodel the properties, release the properties at the new rates, and then maintain the properties with our maintenance division and our lawn care division. We have the full service to offer to the client. As well as the 31 years of experience I have and 2,000 closed sales. So, there's a lot to give these guys and gals.
Yeah, sounds like it. Well, tell us about your company. What's the name of it? And how do we get hold of you to take advantage of your services?
The name of the company is Reformation Asset Management, and that's borrowed from Martin Luther from the Reformation of the Protestants from the Catholics. And it was my break from traditional real estate into this hybrid of real estate management and construction. My best means of contact is through email, and that is CW Bulthuis, Bulthuis, at reformationassetmgt.com.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, now that you've told us the backstory behind the Reformation, just take us on a little bit of journey of that transformation from traditional brokerage to establishing a complete vertical company.
Part of it has to do with attending Lutheran parochial school as a child. So I learned about Martin Luther there. The other thing is, like I stated earlier, the Army, where I learned about, combined arms and vertical integration of your assets. And the other is just pure necessity. Working as a broker, I needed property managers for my clients that had bought investment property, but it was difficult to find property managers that wanted to take on a C property, remove the tenants, manage the construction, and then release the property, hence the creation of property management. Then I couldn't find people that would come service these properties, so I had to create lawn care and maintenance. And then as construction became onerous and, through the supply chains and the COVID, and it just became so ridiculously expensive and time consuming, I took the number of years that I have had in flipping houses and helping people develop land and utilize that in experiences to create the construction side of the company. And then just keeping good credit allowed me to buy my own equipment and finance, what needed to be financed to get it going.
I think you're one of the first people I've talked to who has integrated the construction aspect of it. There's a lot of people who are vertically integrated in terms of acquisition and property management. I don't know of really anyone who's integrated from brokerage to maintenance. You may know some people, but this is a rare breed that we're talking here today here. So taking on the construction aspect of that's really interesting to me. I can understand the frustrations and everything that came with COVID, and I guess that had something to do with your decisions to do that. But that seems like a huge leap into a totally different business and a totally different aspect of doing business. How did you come to decide that was a good idea?
Well, one of my early acquaintances when I was selling real estate in San Diego was a general contractor, and he decided that he wanted to learn about real estate. So he came to work for me as a buyer broker in San Diego. And then we bought land together, we subdivided it, we built some semi-custom homes. Then we would buy some houses, rehab them, flip them. And when I chose to look at the different cities to move to and decided on Durham, I actually brought my general contractor to Durham before I brought my wife. And I said, "What do you think about this place?" And he said, "Wow, this is a diamond in the rough." And so we both went back to California, told our families that we were moving to North Carolina, and we came out here together. And before I actively started working for other clients again, we amassed 39 different multifamily properties here that we bought for cash, and we rehabbed them, and then we would re-rent them out. So we were doing it for ourselves, acquiring, remodeling, managing, construction, etc., doing it for ourselves. And then we were banking with a company called Wachovia. And the morning that we went in to get refinances done on 8 properties we paid cash for and rehabbed, they had already done the appraisals, etc., they said, "We're not loaning money today." Our stock went from 34 to 12. And boom, here's the Great Recession. So I've been involved in remodeling, and this process worked for me as an investor. So I thought, let me bring this to my clients. So I worked a few years at a brokerage locally to acquire the time necessary to open my own company. And then once I had those requirements met, I opened my own company. And then over the last 7 years, we've gone from 2 people to 70 people. and gone from offering brokerage to the full service menu that we have today.
Well, that makes a little more sense. You had the background, and you had worked with an individual who was a general contractor. Is he part of your business today, or have you?
He is 75 years old and can't
Uh-huh.
wait to stop.
75 years is young. He's not old yet. So he's got a ways to go here. Well, very interesting trajectory there. Where do you see the market going nationwide, and then just take that down to the local level?
I think on the macro level, I'm a little concerned because I see shades of 99, shades of 2008 with regards to our real estate prices, our stock market valuations. Then from an economic standpoint, I look at the M1 and M2 money supply, and I see that, we have 2 consecutive years of contraction. That's something that usually is, precursor to a recession.
Mhm.
So but at the same time, the Fed raised rates at a point at a pace that was supposed to slow the economy down.
Mhm.
But what's happening is the combination, the fiscal policy of the U.S. government is at counter ends to the monetary policy of the Federal Reserve.
Mhm.
So every time the Federal Reserve raises interest rates to slow things down, the federal government's pumping more money into the system through incentives like the CHIP program or accelerated depreciation for small businesses, you name it, there's something out there to make us happy. And so, I see our national deficit ballooning at
Mhm.
the same time that we're teetering on the brink of recession. So I am not somebody that's going to tell you right now is a great time to buy land and develop it to sell single family homes. I just don't think that's a great idea. I think if you're in an area where you still have strong job growth and that the job growth is in fields that are secure fields for the next 10 to 20 years, then you could be looking at developing multifamily, and you can definitely be looking at buying multifamily to rehab or as value
Mhm.
add as we do. But I would stay away from properties that you're trying. If you have to bend the numbers, to make the
Mhm.
project work, if it's like trying to shove a marshmallow into a piggy bank while you're wearing boxing gloves, just walk away.
Mhm. Well, that's a
On a
good idea.
local level,
That's a good idea at any time.
yeah, of
But
course. But sometimes, people get wrapped up in their ideas. Oh, I've got
uh,
this 1031 exchange. I don't want to pay my taxes. This is the only thing out there. Well, sometimes you got to pay taxes.
mhm.
Sometimes it makes sense to pay the taxes. Pay the taxes, bank the gain. I don't know anybody that would ever went broke making a profit. But if you take your gain, you roll it into a bad investment, that's a different story. Now you're throwing good
Right.
money out for bad.
Absolutely. So you're not saying now's a good time to purchase property for single family homes. What about commercial real estate outside of multifamily, looking at office and retail, self storage, industrial? What about those areas?
I think with rates at the point that they are and valuations not necessarily declining at the same rate that the rates went up,
Mhm.
you want to see a balance. If rates have gone up and the cost of money has gone up, you want to see a decline in valuations that offsets what that new payment's going to be relative to the rents that you're going to receive. I haven't seen that, not
Mhm.
locally at least. Now,
Right.
maybe in some of the major markets, New York, Dallas, LA, Miami, in those markets, you're seeing more supply and you're seeing a decline in values. In those markets, if you're seeing that decline in value and it's offsetting the increase in interest rates and the higher payments, then that is a good move. But
Mhm.
you need to pencil it out. Here, I'm not seeing it. I just don't see it.
Yeah.
And as a result, our market for office, retail, industrial, warehouse, it's all strong.
Mhm. It's all strong, and the prices are holding, and there's not really the value add. Is that what you're saying?
There's just no supply.
Yeah.
Our downtown is relatively small, and so what's
Mhm.
happening is a lot of new construction. Old buildings are being knocked down, new buildings are going up. Because of how much I need to know about the area I work in, I don't really work in Garner, Morrisville, Raleigh, Wake. I work in Chapel Hill, I work in Durham, and I focus on those cities and what's happening in those cities. And what I'm seeing in those cities, if you see a good buy it. I mean,
Mhm.
I don't like the idea of people that are saying, oh, I'm going to wait for prices to come down. They're not coming down. If they come down, it's going to be because of a major catastrophe. And sure, keep some dry powder in case of that event. But other than that, people that sit on the sidelines forever just tend to miss out.
Mhm. Yeah, this is true. It's just so difficult to tell where markets are going to go, where the economy is going to go, and there's just so many geopolitical
Mhm.
and international things at play right now. It's really difficult to tell what could happen really in just the next few months, even. So
You're right.
just sitting on the sidelines is never a good thing. But like you say, always work the numbers and be sure that it is in the present moment a good deal, and keep some dry powder, as you said, for who knows what comes up there. Well, last words, Charles. What's your last words for us today?
I'd like to thank you very much for having me on your show. I thought it was interesting that we both moved to North Carolina in the same year.
That's interesting. Yes.
Yeah. And I've really enjoyed being out here, and coming from San Diego, growing up in Los Angeles, serving the Army, seeing a lot of different countries and what have you. I thought that I might have trouble adjusting, but it wasn't hard at all. It's a great place to live. I love it here. My friends, when I left San Diego, said, "Why in the world are you leaving San Diego?" And
Mhm.
I said, "Well, the South is the new West." And that's what I'm going to leave you with is the I-95 corridor
Yeah.
from Richmond to Atlanta. That is the new West Coast.
Yeah.
That is 35 million people. That is, it's the new West Coast. There's a lot of stuff that's happening on the East Coast, ports, new trade agreements, what have you. And it's growing here. And it's something for people to think about, not just North Carolina, but South Carolina, Georgia, Alabama, Florida, Virginia, Tennessee. There's a lot happening here.
Well, there definitely is. And yes, I agree with you. It's just a beautiful place to be. I don't like winters here. I'm from the Rocky Mountains and I love the snow. And when I want winter to be winter, and it just isn't here. But outside of that, I love it here. And the people in North Carolina are just delightful people. It's just a great place to be.
I was stationed at Fort Carson, by the way.
Oh, were you really? Oh, wow.
Yeah,
Yeah. Yeah. Well, I lived in Colorado Springs for about 5 years as well. So been to Fort Carson several times there.
I've seen
So
snow.
yeah. Well, wonderful meeting you, Charles. A wonderful conversation. Thanks for being with us. And enlightened investors, as always, thanks so much for being with us. And please take a moment to like, share, and subscribe. And we'd be awfully terribly grateful if you would please give us a rating and a review. Until next time, live abundantly, and we'll see you in the next episode. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.